The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
This is Denise Nostrom, CEO and founder of Diversified Financial Solutions. Now more than ever, investment advice is needed. Not just where best to invest your money, but why. Are you investing for your future retirement? Are you retired and looking to maximize your income? Are you maximizing your income and concerned with leaving money for your loved ones? Are you investing for your retirement at the same time saving for your children's education and at the same time saving to buy another home? Are the markets in line with your goals? Are your goals ever changing? Please contact me at 631-758-8691. That's 631-758-8691, or visit us at diversifiedfinancial.biz. For over 25 years, I have been helping individuals, families, and business owners navigate through all market conditions with only one goal in mind, my clients. Visit me at diversifiedfinancial.biz or call Denise Nostrom, founder of Diversified Financial Solutions, at 631-758-8691. That's 631-758-8691 for a conversation about my most important client, you. Good afternoon, everyone. I hope you are all doing well. It is an absolutely beautiful day here on Long Island. The weather is just perfect. A little bit on the cooler side. I know I like it hot, but no, it's very, very comfortable and very nice. I know we all have our different opinions. One gentleman at the office, Brian, we were talking about how it's getting really chilly at night, and he's like, "It's beautiful. I can open up my windows, and it's just a nice, comfortable sleep." So he is right, but it's summer and it's August, and I want it hot, baby. But I think we're gonna have a nice week coming up, so that's good. So, how was your week? I hope it was good. I am, for one, very, very thrilled. It was Friday. I feel like I've been saying that a lot lately, and I apologize. You know, I always try to be positive, but oh my gosh, we're going through so many changes at the office. It's been crazy. So we've been busy and just hitting it hard every single day. But you know, we're doing okay. So you are listening, like you heard, to the Financial Chick Show. I'm Denise Nostrom, the CEO and owner of Diversified Financial Solutions. Your financial chick is here to help you make better financial decisions and choices to improve your life and reduce your anxiety and stress about money. If you want to learn more about me, you can check out my website at financialchickshow.com. I'm also on Facebook at Diversified Financial Solutions. So like the pages to see what's happening and get updates on everything. So I want to say hi to all the Facebook people that are out there. I want to thank you for tuning in every week. I appreciate you. So you too can go on to Facebook and check out the show. Like I said, we've been working like banshees. We had, our clearing firm had just changed, and that's where we basically process all of our stock trades and everything. And so we've had to make a tremendous transition from the old firm to the new firm. So it's been a lot of work, and we're very, careful. And I guess it's part of my OCD. Like, I want to make sure everything is right, that make sure everything came over properly, and, you know, having to repaper stuff. So it's been a lot. And then of course there's all the other work, which we really haven't been getting to. So, like I said, I'm glad it's Friday. But we did get an opportunity to have some fun yesterday. We went over to Top Golf, the whole staff. So Mike, Scudero, Brian Hardigan, and Sophia Mealy. We all went there, and my daughter actually joined us. And we're going to be posting some pictures on the Facebook page at Diversified Financial Solutions. We just took some time just to hit some balls, because some companies have been really getting us angry. So we instead of taking the anger out on the phone or the people, we figured let's do it with some golf balls. So it was a lot of fun. And yesterday also was just a beautiful, beautiful day. So all good stuff. So today I'm just going to go all over the place. We're going to do a little bit of a market outlook. We're going to take a look at some of the things that have changed or are going to be changing in the big, beautiful bill, and something that's changing in 401k plans that everybody needs to know, especially if you're a small business owner or medium or large size business owner. Some things you're going to have to be aware of in the new year. Talk a little bit about 529s, and then maybe talk about if you're not falling behind or not. So I don't know. I have a very big agenda here. I don't know if I'm going to get to everything, but let's get this party started. So basically, we're just a little bit past the mid-year. So I want to give you some projections as to what some economists are saying about what's to happen for the latter part of the year. So as far as the U.S. economy, they're saying uncertainty is likely to persist for the remainder of the year. But they believe that the U.S. economy can maintain positive gross domestic production, growth of approximately 1.5, driven by tariff and trade policy resolution, upcoming deregulation, and Federal Reserve rate cuts toward year end. So we already saw actually the GDP just numbers came out and they were 3% higher. So we had a slow start to the year. Again, a new administration, but the second quarter was very, very good. We had a nice jump. So we see core rates of inflation holding steady at approximately 2.7%. Netting everything out, we see the environment is modestly favorable for stocks and opportunistic for investment grade bonds. So, again, market's been doing well. We had a great week this week. We had a down day, but the market just bounced right back up. It's been very resilient, and a lot of trade or the tariffs are going to effect. So the fact that it's resilient is a very big deal. So let's talk about bonds. So this has been the what do they call it? The elephant in the room, I guess you can say. So we believe that the Federal Reserve is likely to implement 2 quarter-point rate cuts. And I should say this is according to Transamerica Asset Management. I'm very blessed in the industry that I have. I get a lot of intel that a lot of you may not get, from various different places that I can bring to my clients and let them know what's going on. So back to the bonds. We believe the Federal Reserve is likely to implement 2 quarter-point rate cuts in the latter months of the year, reducing the year-end federal fund rates to a target range of 3.75 to 4%. We're at 4.5 right now. We also see a 10-year U.S. Treasury yield concluding the year at about 4.4% and believe the credit environment will remain favorable for short to intermediate term investment grade corporate bonds. We people that are in bonds, especially people that I'm very conservative, I want to be conservative. Their conservatism basically did hurt them in this environment because it's really been a stock market. But I think we definitely can see, I've been positioning my clients in bonds a lot more than I had been over the past couple of years in anticipation of the rates coming down and, to tamp down some of the aggressiveness of the portfolios, because right now the markets have been raging. I mean, we have one managed account that many of my clients are in. It's up almost 60% year over year, which is like absolutely amazing. So, you need to basically kind of take some money off the table. Keep the positions, but take some money off the table because this stuff cannot replicate itself. All right, so let's go. We went to the U.S. economy, U.S. fixed income or bonds. Let's go to U.S. stocks. Although stocks will likely remain volatile, we will still see modest upside in U.S. equities with our year-end price target on the S&P 500 being 6,600. Potential catalysts for equities going forward include some degree of tariff resolution, resilient corporate earnings, tax legislation, and Federal Reserve cuts. We continue to favor value stocks versus growth as longer-term shift in market leadership between these groups appear to be in progress. Now, if you're a client of mine, we talk about this all the time. You can go into growth. There's 2 styles of growth. Growth investing and value investing. Growth investing is basically, the manager feels that it's a stock that's been pretty consistent. You're taking a look at an Apple or McDonald's or something that's been pretty consistent that typically is a growth play. A value type of style investment is something that has been undervalued and hasn't been doing well. It's not in its lane at this point, but the anticipation is that it's going to be the next thing to swing up. And that would be stuff like, the banks have been doing pretty well. Real estate type of companies, or I could say banks, that type of thing, or, a lot of your blue chip type of companies that pay dividends. So typically when growth is in favor, which it has been for the past couple of years, except for 2022, value is out of favor. So as a person, when I work with my clients, we sell high and buy low. That's what we want to do. A lot of people chase the things like, oh my God, Bitcoin's going up. Let me buy that. It's going up. I want to buy it when it's going up. That's typically the time you don't want to buy it. So if value is a lot cheaper. So if you look at, my clients have both growth and value in their portfolios, you can see there's definitely a disparity in the returns. So we're selling off some of the growth and we're putting into value because we want to get to the next wave. We don't want to, set it and forget it and stay where we are. International stocks. We believe international developed stocks remain well positioned for the remainder of the year and beyond. Valuations versus U.S. equities continue to appear attractive, and as ongoing trade uncertainty within the U.S. potentially mitigates, more global capital could migrate into this space. In particular, we see opportunities in the Eurozone and Japan. So this is the thing when new people come to me, most people are very underweighted in international stocks. And this year, international and emerging markets are the two sectors that have performed the best. So not that you've missed out on it because there's still an opportunity. But it's something that if you're having a truly diversified portfolio, you should have all of these categories in your portfolio. Now, the wild card for the market include the ongoing tariffs, based trade negotiations and geopolitical military conflicts in the Middle East. So again, nothing new, kind of the same stuff that's going on. But the market's been consistently going up and making you money and doing well. So, a lot of the news that's been coming out, the media will make it sound really bad, but the market's not really not giving it too much levity. They're saying that it's okay. We're just going to kind of roll with it and it's going to work out. So, that's basically the market. So I think the rest of 2025 should be very solid. Stay tuned, stay in the market, and make adjustments as needed. I mean, that's the most important thing. So you listen to the Financial Chick Show. We've jumped right into the commercials. So stay tuned and we will talk more. Welcome back. This is Denise Nostrom, the Financial Chick. My company's in Medford, and you can reach me at 631-758-8691 or visit my website at financialchickshow.com. I'm here to help you on your financial journey. Over the years, things change, and I'm here to help you navigate all those changes. And that's kind of what we're talking about today. Change is constantly in the air. It's always happening. The market, has been in constant flux. There's news that are coming out and it's trying to disseminate all of this and unwrap it and unpack it and see what's going on. That's the biggest thing. And then, of course, it's not just the stock market, right? It's, all the other things that are happening throughout the economy and the world and the country and all of that. So one thing that I've been alluding to, and again, I still just with everything that's been so busy, but I do have some juicy points about the One Big Beautiful Bill Act. It's the OBBBA, actually, that was signed into law July of this year. So, it's going to be doing a couple of things. So let's take a look at the first thing. So standard deduction. So when you prepare your taxes, you have an opportunity to either take a standard deduction. So you have your income and then they have what's called like write-offs, right? So you take a standard deduction based on your lifestyle, well, not lifestyle, but I guess, whether you're single or you're married filing jointly, married filing separately, there's all different tax, lingo that they use. So, you have the standard deduction, or you could do what's called an itemized deduction. The itemized deduction is that, okay, I want to write off my real estate taxes and charitable contributions, and maybe if I have medical, if I reach the medical, I'm not going to get too in depth with this. It's more of a CPA thing, but there's a lot of different things that you could take off as far as an itemized deduction. So the last Tax Cuts and Jobs Act, which was of 2017, basically made a permanent higher standard tax deduction. So most of us, are taking the standard tax deductions, especially us in New York and New Jersey, California. When they with that standard tax deduction, they took away SALT, which was a state and local tax deduction. So, let's just jump to the standard deduction. So let's just say a person makes $50,000, right? So the standard deduction amount for 2025 for single filers and married filing separately is $15,750. So let's just say you are making $50,000. Let's say it's $15,000. You would only have to pay tax on $35,000, right? Because you'd get a top of the line deduction, the standard deduction on there. If you're a head of household, don't see a lot of people that have that, but there are people that are head of households caring for a child or a parent. That standard deduction is $23,625. So they could take that right off the top of whatever their income is. Married filing jointly and surviving spouses have $31,500. So, that's basically the numbers that reduce the amount of taxes that you have. And you don't have other things, your 401k and all that kind of stuff. But from a tax standpoint, that's just one part of it. And of course, all of this is indexed for inflation every year. Okay, but now the itemized deduction. So is that going to come back into play? It might. So state and local tax deductions, the cap on the SALT deductions was raised to $40,000 for joint filers with incomes up to $500,000 and $250,000 for those married filing separately. And again, married filing separately, there is a rhyme or reason for that sometimes. You kind of lose some of the benefits for doing that, but I know why some people do that. So it is kind of a carve out. But if you're doing that, know that you have a little bit of a lesser deduction, SALT deduction. So the cap is phased down by 30% for those with incomes exceeding those thresholds of $500,000 or $250,000 until it reaches $10,000. Okay. Now, right now it's $10,000. Or I should say, prior to this, it was 10,000. So now moving up to 40, this is going to enable a lot more people to maybe itemize their taxes, maybe take in their full real estate taxes, take the New York State. So it's going to be an interesting tax season. We have to get an accountant in here to kind of pull that apart for us. But the change is going to make itemizing more advantageous for some higher income taxpayers in high tax states like New York and New Jersey, the ones I mentioned, and those with substantial business related state tax payments. So it's definitely going to be, an assistance for a lot of people. So that's a big change. All right. Now, there's going to also be deductions for seniors. There's a new deduction that's been introduced for individuals as age 65 and older, allowing them to deduct an additional $6,000 from their taxable income from 2025 through 2028. So again, whenever they do these tax laws, it's never like fully forever. It's, certain times, but man, 25 to 2028, this is an amazing, deduction for seniors. It's available to both, as we discussed a little while ago. A deduction is available for both those who itemize and those who take the standard deduction. So that's a big deal. And the deduction is phased out for single filers with modified adjusted gross income above $75,000. So if you're single and make 75 or below, you can take advantage of this. If you're married filing jointly, it's $150,000 or under that you can take advantage of that $6,000. So I know a lot of people say, oh, the seniors always get, they don't get like benefits or that type of thing. So this is a pretty cool deduction. I think this is really something that's very, very favorable, and it's going to help a lot of my clients. So I'm excited about it. So this deduction can be combined with the existing additional standard deduction for seniors. For example, in 2025, a qualifying 65-year-old single taxpayer could deduct a total of $23,750, the regular standard deduction, the existing senior standard deduction, and the new $6,000 deduction. I will just say here that if you're a senior that typically does their own taxes or maybe goes to the library, just be cautious and make sure that people are up on the new tax rules. That's a super important thing. You don't want to miss out. This is stuff that's given to you. This is why people are like, oh, the tax code, people take advantage. No, people are not taking advantage of the tax code. People just know about the tax code and are taking advantage of things that they're very legally able to do. So you too should be taking advantage of things that you can legally be able to do. Some other exciting things is that the law introduced an above-the-line deduction for tip income up to $25,000 and overtime income up to $12,500. So that's a big deal for you people that are servers, bartenders. My daughter is bartending now, or people doing overtime. Police officers or different careers. I'm like, it's been a long week, brain dead. But if you're doing any type of overtime work, that's going to be something that anything up and above, you have to pay taxes. So try to get that overtime income, right? This one is very exciting. And I was kind of shocked. It's been a long time. If you're of a certain age, you might remember this. If not, you'll be like, wow, this is something different. A deduction for interest paid on qualified car loans up to $10,000 is also available from 2025 through 2028. Now, I don't know the actual regulation or rules as to what a qualified car loan is. I'm guessing it has to be something obviously through a bank. You can't be like, hey mom, give me a loan and then you can, take the deduction. So, but that's something that back in the day, we used to always say, all right, we want to have good debt, not bad debt, good debt, mortgage. And when the car loans are tax deductible, there was good debt because you could have some tax benefits. So pretty exciting stuff. And then for those not itemizing, a lot of times you lost deductions for giving to charity. I know for one, I lost a lot of that. I like to give to a lot of charities. And, but for those not itemizing, you can now get a deduction for charitable cash contributions up to $1,000 for a single filer and $2,000 for married filing jointly. So that's really exciting. So help your charities, give money. I mean, now, so you can, it's a win-win. Give money to the charities, but you also can get a deduction, for up to $2,000 if you're married, filing jointly, or $1,000 if you're single. So, do good and do well for yourself, so it's a win-win there. So basically changes aim to simplify tax filing for most taxpayers by making the standard deduction more attractive. It's estimated that a smaller percentage of taxpayers will itemize in 2026 compared to if no action had been taken. Because if this reverted, this would have looked very, very different. So this bill passing was a big win for all of us. However, for some high-income individuals and those in specific situations like significant state tax payments, itemizing may still be beneficial due to the increased SALT cap. Taxpayers, obviously, you're encouraged to speak to your tax professional or utilize software to see what is going to be best for your situation, because everybody is different. That's what I love what I do. I meet with people in person or, FaceTime or Zoom or whatever the case may be, because everybody's situation is different. So my day is different all the time. And I love working with different people and helping them to get to where they need to be. And that's what it's all about. So that's it. I didn't get to most of the stuff that I was talking about, but there's always next week and the week after, right? But thank you all for tuning in. I appreciate you for taking the time out on this Friday afternoon. Remember, let's do better and be better. Take care for now, and I look forward to being with you again next Friday.
Advisory services offered through Blackridge Asset Management, LLC, a registered investment advisor. Securities are offered through Peak Brokerage Services, LLC, member FINRA, SIPC. Blackridge Asset Management and Diversified Financial Solutions are separate and independent entities from Peak Brokerage Services.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.